Arvind Sanger, Managing Partner Geosphere Capital Management, joins in. Hi, Arvind. Were you surprised by the ferocity of the rally yesterday? Will you still buy or will you back off now?
Well, I mean, I remain bullish on the medium to long-term view. But, the markets have come a long way very quickly. And if we look out, over the next 1 month, after the flurry of all these announcements coming out of all the visits, whether it is Prime Minister Modi going overseas or foreign visitors coming to India and, people getting excited about all the commitments of investment by Japan and China and hopefully from companies in the U.S. when he's here, in I guess less than 10 days' time. So all of that will be positive, but the reality is at the end of the day, the market lives on not just big picture announcements, but actual, numbers becoming visible. And so the September quarter that, is earnings that are around the corner are going to be, I think, moderately better than the June quarter, but not hugely so. And therefore, I think the markets need to digest how much they've moved. So I don't know if I'd be, so to bottom line it, I don't know if I'd be chasing the rally, but I don't think if you take a medium to long-term view, stocks are at least a lot of the stocks that we think are interesting are too expensive. But, there's some things to keep in mind. It's the liquidity taps are wide open. Fed is going very slow on any increase. There is hope that China is going to add fuel to the fire. Clearly, the ECB is trying to add fuel to the fire. So in a liquidity sense, at least, the backdrop is very favorable. And the other very favorable backdrop is commodity prices led by oil have corrected quite significantly, and that is a huge positive for a country like India with its current account deficit driven by some of these commodity imports. So I think there are some positive backdrops which allow for India to be in the sweet spot.
All right. Yes, Arvind, liquidity, as you say, is never ending. Do you think this is leading to a seller strike here, which will prevent the markets from falling much?
Well, I think it looks like it. I mean, I was hoping, to be perfectly honest, to get a bit more of a pullback because there are stocks that we'd like to add to or buy that, we'd look for a pullback. But it looks like in the absence of any global macro negative news, in India at least, no news is good news or whatever, moderately good news is good news. And there doesn't seem to be. So unless we get some shocker from an election, results over the next month when you have Maharashtra and Haryana going to the polls, unless you have some negative surprise on that front or something else negative comes along India specific, I think the backdrop does suggest that we could have a seller strike.
Okay, Arvind, would you not buy at all now? And if you are, in which sectors are you fishing?
Well, I mean, not buy at all is, we're always in the market looking at opportunities and looking at ideas. But, I think select companies in the, cement space, in the infrastructure space we're looking at, but frankly, the large caps are not as interesting as some of the mid-caps. And even, maybe companies, specialty, companies in finance or some other special situations. But I wouldn't say that, broad-based, I can make a case that, either the power sector and the auto sector is interesting. The stocks have moved, but nothing is undiscovered, whether it's the financials, which I think will have great medium-term fundamentals. We're always looking for opportunity for specific names that may be more attractive than others. Auto is the same story. And I think, infrastructure and power is much more difficult. And then, the specialty names, even in the IT space, where I think the secular story is less India dependent and things seem to be going well. So I think, there are areas that look interesting, that we're finding opportunities, and there are specific companies. So it becomes more, in my opinion, of a bottom-up stock-picking market rather than making big macro calls about, let's go buy the energy sector or let's go buy the power sector because of X, Y, or, Z happening. And I would say the one negative that we see out there from a sentiment standpoint is this continuously postponed decision on the gas price. That's one area where I'm frankly expecting a disappointment in terms of the Modi government backtracking on what was a very sensible decision by the previous government.
As you say, the mid-caps have vastly outperformed, especially in the past 1 month. So among mid-cap auto ancillaries, mid-cap software and mid-cap pharma, any names that you particularly like?
Yeah, I think we like companies in the auto space. We like companies in the cement space. We like companies in other specific financial niche companies. So I think that the mid-cap space is where we are finding much more attractive opportunities. A, because the stocks, even despite the run-up, are relatively, still there are some relatively attractive opportunities available. B, because, again, the leverage of some of these smaller companies in a recovering economy is larger than it is in, some of the frontline stocks. So I think, yes, I think there are opportunities there, and mid-caps is where the incremental dollars, whether it is FII money or, more importantly, eventually the money coming from not just HNIs but broad-based. I think one of the bullish things that we are seeing is mutual fund inflows in India starting to turn positive in a big way, and I think that will be, if you were to ask me in the next 12 months, I would hope and expect that we'll hear more about domestic investors and what they're buying, and that again starts to drive mid-caps versus purely FI-led market, and I think that that's another reason to think of mid-caps as quite interesting.
Okay, Arvind, you spoke about the plentiful liquidity from the various central banks, China, Japan, Europe. Does this make you feel that 9,000 is round the corner for the Nifty? When do you think we may reach that landmark?
Well, the Nifty is just above 8,100, so 9,000 is it's 10% away. I certainly can't rule it out given the kind of sentiment and liquidity. How soon we get there is all. 9,000 we're going to get there. The question is when, and do we get there by year end, sooner or later? My expectation, and frankly, it is higher than where I would have been 2-3 months ago. My expectation is we should get there, sometime between year end and early next year. But I'm hoping to get there. And here's the real, one negative that I've put out that we don't talk about too much is I'm hoping after the election, in the state elections over, we will see some bold, big picture announcements by this government, whether it is, examples like diesel deregulation, doing something meaningful to address the land acquisition issue, doing something more, coherent on the labor policy. There are a few things there that would require, confidence. One of the things that's a negative that nobody's paying attention to is that the first disinvestment that this government is doing is SAIL. This is one of the worst run PSUs. I suspect there's not going to be much institutional interest. I suspect this is another one that's going to be stuffed into LIC and other domestic, government-controlled institutions. That's not indicative of a government that is paying attention to what needs to be the right steps. So hopefully, this is one isolated instance, and we will get some help in terms of some meaningful bold policy announcements that continue to add to the existing investor confidence.
All right. Arvind, we let you go on that. It must be late for you right now in New York. Thank you very much for joining us.